Good Sunday morning, traders. This is Sam, the Trader Geek, with your Sunday, January 18th, 2026 weekly market review and preview. Hey, sorry I couldn't make it last week. Had a good friend who passed away and another client who also passed away. So a little busy for the weekend, couldn't prepare a video, but we're back. Anyway, let's take a look at what the market did over the past couple of weeks and year to date and what have you. And so we're starting off with Friday's action, which was pretty lackluster, nothing really going on. It was mixed bag, as you can see. Bitcoin was up a little bit, microcaps um, extending their lead on the major indices up uh, 19 basis points. The VIX was up slightly, and small caps eked out a small gain. But for the most part, bonds were down, yields were up, gold lost a little bit of ground, mid caps, and what have you. So Friday was just a uh, expiration, which didn't see a whole lot of excitement. It looked fairly calm. This is an options expiration with leaps, the once a year long-term options that expire, and some of those have to be replaced. But anyway, that's over, and we're back to a regular holiday shortened week today, this week, 4 days. Looking at last week's VIX was up the most, almost 10%. Bitcoin gained some ground, recovering about 6%. Microcaps, as I said, are doing well. So are the IWM, which is really sealing the show away from the tech heavy NASDAQ and the broad S&P 500. Mag 7 giving up ground, basically looks like a source of funds. Hughes losing 86 basis points in the SPY, somewhat flat, but down on the week. So it was a mixed bag all around, with gold ending up, mid caps up. So the higher or the bigger the capitalization size, the worse they fared on the week. Dollar gaining about 37 basis points on the week. And surprisingly, high yield bonds eked out a bit of a gain. Taking a look at month to date, which is really only 2 weeks into it, microcaps up there about 8%, IWM, the small caps up 7%, and Bitcoin showing the recovery so far this year. Probably wipes out all the losses from all of 2025, since Bitcoin was down 5 or 6% last year. Gold continuing its lead, but the real story is silver. And we'll show you something for that in a few minutes. Mid caps 4 3/4. Max 7 losing down on the year, but fractionally 69 basis points. Everything else is positive in terms of major markets. Quarter is the same as the month. We'll skip that, and so is the year to date. So no need to go through that. The sectors on Friday were also mixed, with real estate leading the way. The only sector up 1% or more. Industrials really strong, and looks like they have more gas in the tank. Metals and mining up 35 basis points. At the bottom of the list, communications on the back of Google and Meta being down, and healthcare losing 0.75%, and transports giving up a little bit from their torrid run, not bad. Materials down 0.5%, also been strong in light of the metals and mining stocks, and retailer stocks down 0.5%. Looking at the week, we see that metals and mining continuing their winning ways from 2025, and XLRE, the real estate, getting a strong start for the year after a pretty weak performance in 2025. Staples finally hurdling that $80 level, the XLP, and gaining about 3.61% on the week, and the industrials up 3.07%. XLE energy showing some strength, albeit 2% so far this week, and then utilities also gaining ground. So if it wasn't tech related, it did pretty well last week. And you can see that it is a mixed bag. At the bottom, the XLC communications and XLF financials. Good results, poor price action is the name of the game in the financials, except for Morgan Stanley, which did pretty well. And I think Goldman Sachs initially had a good reaction, but I think it gave back quite a bit. XLY, essentially Amazon and Tesla, along with numerous other names, but those are the two major weights. Both of them losing ground this week, 1.7%, and healthcare losing 1%. Taking a look at the month to date on these sectors, metals and mining, look at that. I mean, nothing even comes close, up 15.5%. Consumer staples finally getting the bounce that deserves, 5.7%. But XLI, which was strong towards the end of last year, is also continuing its winning ways, along with materials and retailer stocks. And you can see real estate is catching up. So is energy. At the bottom of the list, communications, financials, and telecommunication stocks. So you can see obviously we're only 2 weeks into the new year. You can see that the financials and the communications showed weakness last week and the week before, which is essentially the year to date so far. Taking a look at some of the industries, since it is the beginning of the year, I'll cover a little bit of these. Blockchain stocks up 2.4% to go along with that Bitcoin. The defense stocks, not the defensive ones, up 1%. SMH making a new record high this year so far, was up 1% on Friday, and GDX eking out a small gain. At the bottom of the list, the venerable cannabis stocks down 2.5%, and then KWeb, which had a pretty strong day the other day and just gave it all back. Here it is, down 1.84%. ITB, home builders, pretty volatile. And then software stocks, which just cannot seem to catch a bid. And basically that's fears over whether AI is going to displace them. I kind of think not, to a certain extent. These companies like Adobe and CRM and Workday, Snowflake, they'll figure this out, and they'll have a place in this, albeit a different direction. And the cyber stocks also haven't, which are mostly software based, haven't really done much this year, but they've shown some weakness probably on the same thinking, but software stocks have been just awful. FDN, internet stocks, 0.88, but tech related, and then entertainment, 0.6%. Taking a look at the week, we have blockchain stocks also in the lead, GDX up 5%, the miners, ITA, the defense stocks, and solar stocks up 3% on the week, with the SMH, the semiconductors up 2.87%. And showing the strength of energy, we see exploration and production ETF up 2.26%. There's a software for you, kind of worst of the bunch for the week, and then FTN internet stocks going along with tech stocks, and the cyber stocks down. KWeb is Chinese tech, so there you go. Taking a look at month to date, which is also quarter to date and year to date, GDX, look at that, 13.43, continuing on the march to $100. Couldn't tag that $100 mark yet, but I don't believe that's too far off. Blockchain stocks up 11%. Home builders, despite the weakness last week, still up 10% on hopes for lower interest rates and increased interest in home buying. ITA, this is the defense stocks with war drums, just faintly heard around the world in different parts. SMH, look at that, up to hit 400, 7.26%. Robo stocks, 4.79. At the bottom, there's your software. hasn't gained any ground this year. So are the internet stocks. And, we don't have to talk about cannabis, but there it is. Every time you look at a chart on cannabis, it's up. Oh, no, wait, it's down. And in any case, let's take a look at the Mag 7. You see Meta on Friday last week losing 5%, along with Microsoft and Amazon. Amazon looking like it was a breakout. It still hasn't failed, but it just can't seem to hold those rallies and starting to get going. I think last year, well, I don't think, I know that last year was Google's year, and maybe 2026 will be Amazon's year. At least that's my thinking. We'll see if that comes to being. Tesla losing 1.7%, and Nvidia and Google, the only two of the Mag 7 gaining any ground last week, but neither of them were over 1%, and all the ones that were down were down more than 1%. On a year-to-date, month-to-date, quarter-to-date basis, very mixed bag. In fact, again, Amazon and Google, the only ones that are up on the year. Tesla's flat. Nvidia is just down a little bit, but Apple still can't get out of its own way to rally sustainably. And Meta also, could it be continued fears over the spending over there, or what's going on? Are they going to not really are platforms like Instagram and Facebook going to get disrupted and get people so disgusted from using them because they can't tell what is real and what is AI? At least that's what I'm reading. So that's basically in a nutshell, what we have going on this far in this very young year. We have a half month behind us. And so that leaves 23 more half months to go. Let's take a look at the charts and see what the major indices are doing. And we'll start off with my tri-pane. And for those of you who are new to my videos, welcome, and I appreciate you watching and listening. I basically have a daily chart on the left, a weekly chart in the middle, and a monthly chart. And I usually go through the major indices. Just to familiarize you with my charts a bit, you can see that I have Bollinger Bands, the standard 2 and 20 Bollinger Bands. Red line is 200-day moving average. We have the blue line, that's the 8 EMA, and the dark blue line is the 50 EMA. Green line is the 21 EMA. And the rest are some drawings that I have in here I'll talk about. I am an avid user of chandelier stops and PSAR as kind of stop and go signals. And these are essentially volatility stops to help both with the indices and with the stocks to see what kind of state they're in. And I find them really handy. So on the daily chart, we have a bullish chandelier and a bearish PSAR. So kind of two different momentum indicators. It's just that one is tripped to the bearish side versus the other one has not. So it was another week where we got an all-time high on Monday and just proceeded to go sideways to down. And we had a pretty good dip on Wednesday, recovered on Thursday and Friday, but you can see they're still all red candles. We opened up and we closed down. We opened up on the day, but closed down from the open. MACD looking to flip back negative with the fast line crossing over the signal line. And we still have a sideways RSI going nowhere, neutral at the 56th level. So if we look at the weekly chart, and you can see that we had a doji. And so what I like to look at when you have a doji is if we take out the low of last week, 68.86, or we take out the high of 69.86. So it really is literally we closed in the middle of the weekly range. So anything below 69.86 or above 89 69.86 or below 68.91, call it, then that might be a go with market either to the upside or to the downside. You can see that I have a lot of junk on here. I've got some supporting here, but options implied expected move here is up here. And for this week, we could see it a little bit more clearly here. We tagged the lower edge of the expected move. Last week it was 84 points, and we just tagged it and we stayed right below the implied expected move up here, which was essentially 7,050. We never quite made it to the 7,000 level, and the lines in green and red are the current week's options implied expected move, which I'll talk about a little bit more later. Taking a look at the MACD on the weekly, it's basically sideways, but the fast line is below the signal line, giving a little bit of an edge to the bears. RSI is not overbought, above the neutral level, so it's also going sideways. And if we take a look at the monthly, again, nothing wrong with here ever since this dip back in April. We're climbing up, And let me see if I make this, yeah, it's not helping to make this a little bit clearer. I got too many drawings on here. Anyway, this is our doji candle so far no, that was December. And we still have somewhat of a doji on December. We're solidly overbought on the RSI, and that's what you expect with a longer term time frame chart. And the longer it stays that way, the more protection we have against a protracted decline. Obviously, things have to propagate from the daily to the weekly and then eventually to the monthly. But so far, everything looks okay. It's the bulls market to lose at this point. So nothing wrong with this. We're having consolidation and chop up the wazoo, quite honestly. And it's been not only frustrating for day traders, but also frustrating for swing traders. And you got to be quick to take your profits and not and take your stops as well, because if you don't, they're taking them for you. Flipping to the NASDAQ, and you can see that again we have a mixed bullish chandelier, bearish PSAR, and the candles look very similar to the SPX. So this is the NASDAQ. And we had that same little dipsy doodle to the bottom. Never quite made it to the lower edge of the options implied expected move. Well, that's this coming week's options implied expected move. It's about 320 points, actually. But we never did quite get out of the range. So we were within the range for this week. MACD's looking to flip negative with the fast line over the signal line. And then we have sideways RSI right at the neutral level. Same as SPX, we have a little doji for the NASDAQ candle. And, considering that tech is basically a 34% weighting in the SPX, it's not unusual that the tech weighting is going to drive a lot of what happens in the SPX. So next week, we go above 25,873 or we go below 25,266. That might be a go with market since we'll be doji up or doji down for those particular weekly time frames. Obviously, with these weekly charts, it's the weekly candles that matter, depending if that's the time frame you're looking at. MACD is definitely solidly negative, but not below the zero line. And so is the RSI. It's closer to the neutral level than the overbought level. Looking at the monthly charts, you can see another doji forming after we had one in December. And MACD solidly positive, still overbought RSI. So the monthly chart rules all and nothing bearish in this picture. A lot of consolidation, certainly lots of chops in the tech sector, and the number of winners versus losers were kind of obvious last week. If you're software, you did okay. If you're blockchain stocks, I mean, if you're software stocks, you didn't do well at all. If you had some of the blockchain stocks, they did fairly well. One more here, take a look at the rut. And this one, totally different picture. And it's about time. Look at the MACD on the Russell small caps. Definitely different than the NDX and the SPX. And would you look at that? The RSI finally up to the above the 70 level, overbought. Now we need to have that stay there for a while. And you can see here, it's basically been like a rocket ship, and we are traversing and the upper edge of the 220 Bollinger Band. Really nice week for the Russell 2000. And you can see here we got about a 46% range for this week's small caps. Looking at the weekly, even better, MACD is positive, and the RSI is looking to get to 70. And once you get to 70 and above and you have a weekly close above there, that's a very positive sign. So obviously the small cap set a brand new all-time high last week. Two nice solid candles. Hopefully that can last and help carry the market through anything worse than a minor correction. Chandelier is bullish, so is the PSAR on both the daily, weekly, and the monthly. On the monthly, we can see that we took out this what do you call this? Tombstone Doji. Anyway, we took that out and with authority, and a beautiful monthly candle forming so far. Obviously, we're only halfway through the month, and we'd like to see that continue. MACD solidly positive, and looky here, we could get overbought on the monthly. So the small caps are so far the outperformers this year. Love for that to see that to continue. The only thing more impressive than the small caps has been the microcaps, and I usually don't talk about these, but since we're here, look at this uptrend. You can see here microcaps were up about 20% last year, and here we are, two nice weeks. Last week, microcaps were up about 3%, and year to date, they are up about 8%. And, since the bottom here in April, we've come from a low of $95 to 170. So we get to 190, and that would be a double in a year if we get there by April. So microcaps looking awesome. Buybacks are pullbacks are buyable, is what I was trying to say. In any case, let's take a look at, like we usually do, at the VIX, and we can see on the daily chart that we had a somewhat slight update, but after Wednesday's spike up to 18.1, we came in for a couple of days, but Friday was slightly positive. MACD is certainly supportive of a market that maybe wants to pull back a little bit and do a little bit of correcting on what seems like a little bit of excessive bullishness out there in the market and high expectations. I mean, there's not many people expecting a negative year for 2026. And while negative years are the exception, not the rule when it comes to the markets, certainly something with a, that's not up and not down big, but something up very small or down a little bit is a good possibility. But we'll see. So the VIX closing at 1586, and if we take a look at last week's VVIX, you can see we got when we look at the VVIX, we're talking about the volatility of the volatility, and that's a measure of VIX call buying, to be honest with you, and it's also an indication of institutional hedging. And when it's under 100, I don't really pay a whole lot of attention to it. It just tells me that it's just normal noise. Now, we closed at 102, we haven't kind of dissipated back to the 80s or 90s levels. So this has my attention a little bit. But the main thing here is you could see on Wednesday when we had that down open and a continuation lower, we got up to a VVIX of about 112, albeit we closed at under 105, but still above the 100 kind of line of demarcation. And where I like to think that danger, no danger, over 110, then it really has my attention. Let's come over here and take a look at the VIX. And what I like to do for the new viewers is take a look at what the VIX options pricing is, or what VIX option prices are. And so since we closed at 1586, let's call it 16. We'll round it to 16. And if I take a look at the out of the money calls, say $1 out of the money, that would be the 17s. And note that this is a VIX contract expiration and a VIX options expiration. So you look here, you have a lot of weekly expirations. I don't pay a whole lot of attention to them in terms of the weeklies unless I'm looking for immediate feedback on what's happening. But this is a monthly VIX expiration. The last time to trade these is on Tuesday at 4 o'clock Eastern time. And then the corresponding VIX futures contract expires on the open on Wednesday. So these are cash settled options, which means that one way or another, by Wednesday morning or by Tuesday evening, if you're in them, you're going to be cashed out of them one way or another, depending on what the ultimate settlement is on the opening print on Wednesday. So I usually like to go out further in time, but what I'm seeing across all timeframes is this nonsense where we have zero bids and big pricing for the ask. And so this doesn't really tell me a whole lot. And I've gone through all the weeklies, and if I even go out further, you can see something or another didn't happen correctly on the pricing. But oddly enough, on the pricing for Tuesday's expiration, monthly expiration, if we go out to the 17 calls, they're pricing out at about, call it 47 cents for the calls. And you go out $1 out of the money, they're basically zero bid by 3 cents, so a couple pennies. So the pricing of the calls tells me that there is more call buying than put buying, and that the edge, as far as this one data point, goes to the bears for the VIX options pricing. So this is telling me that the bears do have the edge here, and there is a bit of VIX call buying. One other thing I like to talk about in terms of the VIX future structure is to see what kind of condition it is. And the two conditions we associate with products like the VIX and other commodities is contango and backwardation. Contango just means that the farther you go out in time, the higher the number. So you would expect as you go out in time that there's more time, more uncertainty, and therefore you would have a higher VIX. And indeed, what you see here is that the farther you go out in time, the higher the VIX, and that makes sense. And that's called a condition of contango. It's in its normal formation. It's when the VIX, the front month VIX, and the spot VIX gets above all of these contracts where you have some near-term or immediate risk in the markets, and we don't have that right now. But one thing to observe, as I've mentioned in a few other videos, is that I'm just surprised that you just go out to February, we're already at 18 VIX. Sorry about that. And then you go to March, it's 19, 20. So definitely pricing in more volatility as the year moves along. And it's not dramatic, but it is quite noticeable. And that's why I have some hedges on going into the March, April timeframe. So SPX, taking a look at the options implied expected move. And this is something I do every week. And you can see here that with a 4-day trading week, we have 82 points is the expected move, plus or minus. And I really think it's still pretty low, but last week it proved to be prudent since we closed inside the options implied expected move. But 82 for this week, 84 for last week. But when you consider that 84 points was for 5 days, and now we have 82 for only 4 days, you can tell that volatility has increased, and you might say, well, duh. I mean, the VIX was up on the week, so yeah. But also the fact that we have the same movement with 20% fewer days also says that we do have some higher volatility here. So, what do we got coming our way this week on the economic calendar? Nothing for Monday. Obviously, Monday is a holiday. Futures will be trading, but on limited hours, but nothing else. Tuesday, no economic reports either. So not until Wednesday when we get construction spending and pending home sales. And I believe this is the quiet week for the Fed heads, so we don't have to hear them yakking or spouting off, since the following week we're going to have an FOMC meeting and decision. But Thursday, we start to have a trickle or a flow of economic reports with initial jobless claims, first revision of Q3, not Q4, Q3 GDP, personal income for November, and PC index. Not sure why that's still relevant, but nonetheless, it's there. Core PCE also. And then Friday, we get consumer sentiment and S&P flash PMI and services and manufacturing for January. So we're starting to catch up on these economic reports, but the real busy one is Thursday. So we don't have anything really going on in the economic reports until Thursday. But we do have earnings starting to kick in. I'll be a little bit slow Monday or Tuesday before the close. We have 3M reporting, D.R. Horton, U.S. Bank Corp, Fastenal companies most know, KeyBank. After the close, Netflix, United Airlines, Interactive Brokers are the biggies. And then on Wednesday, Johnson & Johnson, Ally Bank, and Travelers reporting in the afternoon. Not a whole lot going on in terms of earnings, but Thursday, P&G are the relevant ones until after the close, and that one has been on a tear. GE Aerospace, Capital One, Alcoa, Abbott Labs. Those are the biggies that most people are familiar with and trade. Huntington Bank, another regional bank. So Friday, the only notable one is SLB, the former Schlumberger on the earnings side. And then Comerica, which has been acquired or in the process of being acquired by Fifth Third Bank, which reports Tuesday morning. Not sure what that impact is going to have, but in any case, since that acquisition is all but certain to close, we'll see what happens. Let's see. Wanted to back up one more thing to kind of show you and make this a little bit smaller. There we go. This is a little bit something from Bespoke. And I won't talk about this too much. Just show it here. You can pause the video if you want to see what's happening. But what I mentioned earlier about silver is already up almost 26% year to date. And that's after it was up 100, almost 145% in 2025. It's incredible. And just this past week, it was up almost 12%. So the only thing that comes close to this is really nothing. Even look at gold. I mean, not even half on the year, not even half year to date, and it's basically asleep compared to silver. So who knows how much further and higher this can go? But that is an incredible amount. So what you see here highlighted, these are some of the standouts for the week. And you can see emerging markets are having a good run so far this year after a pretty good run last year. Those other countries, industrials, materials, consumer staples, and energy are leading. And then on this side, IWM, not sure why he doesn't have the microcaps in here, but in any case. Anyway, what we've got coming is, I think, more chop. Interest rate decision doesn't come until next week, but it's all but a certainty they're not going to lower rates. In fact, I don't think there's any good chance of an interest rate cut. So that naturally makes the markets a bit nervous and wondering what's going to happen. But we probably won't see another rate cut with this Fed chair until he's out and we get a new Fed chair in May sometime. The other thing that is looking like it might be coming out is the decision on the tariffs. And I'll still say I think people are making much ado about nothing, but I don't have a clue. At least that's my opinion. I could be totally wrong, but that could be out this week and that could rattle things. So bottom line is this is a bullish market. They have the edge. And there's no signs that of going net short, although it's nothing wrong with being a little bit hedged or taking some profits off the table. And my thinking is that we probably have a lot of back and forth choppy action until we get some answers and certainty about what's going on in the economy and what's going on with interest rates. And so earnings coming up will be telling. And if we can get the other 493 of the S&P 500 to take the baton from the Mag 7, that just means that we have a rotational market and it continues to go up. But for now, try not to get chopped up. There is a lot of that. Under the surface, you see a lot of churn and a lot of stocks not doing very well. But in any case, as they say, there's always a bull market somewhere. Don't be buying the laggards because that can be detrimental to your P&L. In any case, I appreciate you watching, you listening. Pass this along to your friends. And this is Trader Geek Sam at Trader Geek on Twitter. Give me a follow, and I will be back with you next week. And thanks for watching. Take care and have a great long weekend. Bye-bye.